realized that had an office here in Topeka. So I'd like to welcome you to the committee. Thank you. And come on up. You'll have to turn on your mic there.
How's that? Can you hear me now?
I can, which if I can, probably most anyone, everyone else can. So
I have a habit to speaking kind of loud, so we're all right. Mr. Chairman, committee members, thank you for the opportunity to speak with you today. My name is Greg Jordan. I'm the State Director for the Kansas Small Business Development Center, and we'll just go by Sbdc to keep this a little bit shorter. The Kansas Sbdc has been serving small businesses in the state since 1983, and is part of a nationwide network of organizations we serve 63 state, regions, and territories. There's a statewide host organization for the Kansas Sbdc who applies for the federal grant and subcontracts with other organizations across the state. Fort Hays State University has been the statewide host for the last 25 years. The regional hosts are Emporia State University. Fort Hays State University is also a regional host, so I contract with myself. Johnson County Community College, the University of Kansas, Pittsburgh State University, Seward County Community College, Wichita State University, and Washburn University are all centers underneath the state. The Kansas Sbdc provides counseling and training to support business startups and existing businesses. We assist an average around 3,000 unique clients per year with about 19,000 hours of counseling, resulting in an average of $100 million in capital infusion, 300 new business starts, and creating approximately 5,000 jobs in Kansas. Since COVID, we also do about 500 training workshops a year, typically with approximately 5,000 attendees. But since COVID, we've done about 750 workshops and about 10,000 attendees, trying to help people with PPP, et cetera. We have clients in all 105 counties who we assist with our core assistance services, which we consider money, marketing, and management. In addition to the core activities, what I'll speak to you today is Kansas Sbdc operates several especially initiative centers, funding permitting. The CARES Act funding provided the opportunity for us to open one of these statewide centers as a pilot project to provide assistance designed to meet the needs of small business during this critical time. As the CARES Act funding became available, access to capital was really one of our first concerns and an urgent need for small businesses. Unfortunately, many small businesses do not have an in-depth understanding of the banking process to enable them to quickly access loans. This is especially true for the more complex loan packages. Also, many lenders do not have significant experience in some of the SBA lending or the capacity to provide any in-depth assistance. Capital Access Center provides training and counseling to help. In the past year, the Capital Access Center has delivered 152 training presentations and webinars designed to educate both small businesses and lenders. More than 50 clients have been assisted with in-depth advising. The Capital Access Center provides assistance to small business in financing and provides lenders with more bankable applications. It's especially helpful in organizing loan packages and client information in ways that make it easy for banks to understand and act upon each request. The Capital Access Center also helps clients understand which banks might be most interested in the types of loans they are seeking. This concept has been extremely successful. Within a few months of hiring our experienced banker in the role, the need for these services were confirmed. Almost immediately, clients were identified who are in desperate straits, largely because of the economic downturn and uncertainty surrounding the COVID-19 pandemic. This was especially true for small businesses who were in the process of opening business that involved a large number of customers on site. The best example of this is an event center that was in process when everything shut down in 2020. The land had been purchased, but the construction had not been started when COVID closures happened. There was uncertainty as to when, if ever, large event spaces would come back, and as a result, the approved construction loan was withdrawn. The owner searched on his own for nearly a year to no avail. He attended a presentation where the director of our Capital Access Center was speaking and introduced himself. Together, they worked to restructure the loan package and supporting materials. Within 1 week, there were multiple offers from banks to complete the loan. In the end, 2 banks teamed up. One provided construction and the other operational funding. The event center broke ground and recently opened. On their opening day, they had nearly $1 million in pre-sales And at the ribbon cutting, the owner told anyone who would listen, myself included, that without the Sbdc, this opening would not have happened. Capital Access Center clients have closed more than $32 million in loans in 1 year. There are currently $26 million worth of loans in the pipeline, and they've closed about $2.5 million this month alone. In November, the Kansas Sbdc hired a second advisor to operate primarily in Western Kansas. This person has more than 25 years of banking experience and lived in Western Kansas his whole life. There's little doubt the impact from his assistance will be felt really soon. Together with the team of the Capital Access Center, they have more than 50 years banking experience in Kansas in addition to their own small business experience. It's proven itself to be of great value to clients through its many successes in a short time. It's also very popular with economic development organizations and the banks themselves. It fills a critical need for specialized skills that are not available to every entity seeking to assist small businesses in Kansas. So that kind of sums it up. I'd like to leave you with a quote to describe how the Capital Center's effectiveness on a more personal level. One lender told us to meet, determine a fit, collect a full loan package, underwrite, and gain approval in just over 2 weeks is so very rare in the commercial lending world. And a big reason we were able to move so quickly is they were prepared, they were well coached, and a very thorough business plan with well thought out projections. Every question that came up was quickly answered, and every what-if scenario had been planned for. It's refreshing to have borrowers that truly understand their projections and tell you why the numbers are what they are. That's from Michelle Walters, the Vice President of SBA Lending at Fortune. With that kind of overview, I'd like to answer any questions you might have.
Any questions? Representative Neely?
Thank you, Mr. Speaker. This is not so much a question as it is just something that I'm aware of. One of the people that you do work with, one of the bankers that you suggest, Vincent Hayworth, I've known for almost 30 plus years. He's a genuine guy. I've seen him work with multiple people and everything, and I'm in full support of what you guys are doing.
He was a great person to lead up this project.
Absolutely. Thank you, Mr. Speaker.
Any other questions? Yes, Representative Donahoe.
The state of Kansas is theoretically involved in negotiations with some entity, $4 billion or something like that, and where the state is being asked to come up with $1 billion in financing. I'm not sure the particulars because it's kind of not out there in the public domain. Are you familiar with that?
Just what I've read in the papers, sir.
Right. So my question is, if the small businesses were provided that money, the $1 billion that's purported to be potentially offered to this large entity, do you think the small businesses would get a greater return for the state of Kansas than what's purported by this?
Well, I can't speak for other people's projects, but I know that.
I'm just saying, if you had $1 billion.
Yes, certainly on the last 10 years, our average return on investment to the state of Kansas has been 23 to 1.
Been what?
23 to 1 over the last 10 years.
Okay.
And currently our funding levers are.
Projected for this, what the rate of return is for this program? I know there's not much information.
For this particular program, well, it's slated to end in September. But it's a relatively low-cost program. It's about a little less than $250,000 a year.
No, I'm talking about where they're enticing this business in.
Yeah, that's really a different zone than we operate in. We're really about building and expanding current businesses.
I understand that, but if you had the dollars
Yes.
that are being put into that, theoretically, if you were infused with those dollars, how do you think you would compare in the small businesses? I know it's a lot of, but I'm just trying to.
Well, and $1 billion is so much larger than I'll give you an example. We received $1.6 million from the CARES Act, And this was one of 7 different programs that we operated that have all been met with pretty large successes in assistance to small business. So our numbers are so much smaller. Our average annual budget for the entire state is around $3 million. So $1 billion would be, well, it's a great number. It's overwhelming to the amount of service and assistance we can provide immediately. But I do believe that we can help. One of the things I told the Board of Regents recently is over the last 10 years, since the Brownback administration, we've shown that we can do more with less, and I guarantee we can do more with more.
Okay, as a lawmaker, I'm trying to
I understand,
assess, and
sir.
I know there'll be other information out there, but I just want to get your opinion
Certainly,
with regard to that, okay?
certainly.
Thank you, Mr. Chairman.
Thank you. Any other questions? Well, the one thing that I know, Mr. Jordan, for the 7 months of last year, I was involved with an economic development group that had an Sbdc office in our office. And so we did see a lot of activity. Like you said, it's much, much smaller individuals that you're dealing with and businesses that their ask is minuscule compared to even some of the big ones that on the development side we worked with, but it certainly does a lot of good and it gets a lot of people up and running. So appreciate your efforts there.
Certainly, as a small business assistance center, typically we operate with clients who have less than 500 employees, depending on their NAICS code and what category they have. So we definitely work with the smaller end, but 98% of all businesses in Kansas fall into that category. On a different note, we're looking to graduate one of our first clients this next year, possibly the year after, where they'll no longer be a small business. And that's pretty exciting to come from startup when they first walk into our door with 2 people to where now we can't technically serve them any longer.
Always a good thing to have.
It is a good thing, sir.
Well, appreciate very much you being here today.
Thank you very much. Appreciate it. If you have any questions you can think of, feel free to email me or my staff.
Sure will. Thank you. Now that we get ready to head into the banking side of things, I'd like to have the request for bill introductions. Melissa?
Members of the committee, I'm Melissa Wangeman with the Office of the State Bank Commissioner, and I'd like to request the introduction of 2 bills and also thank David for drafting those for us. The first one is 22 RS 2755, and the second one is 22 RS 2617. 2755 enacts the recommendations coming from the Joint Committee on TEFI Oversight that met December 7th, and it would ensure that the pilot TEFI beneficent could transact business in our state starting 12/31/21. And then 2617 updates Kansas law relating to mortgage business to allow the employees in the mortgage industry to work remote.
Without objection, those 2 bills will be introduced.
Thank you.
You, Melissa. Any other bill introductions? Not? We'll move on into our banking kind of overview of what's happened since the last time we've had a report. And of course, last time, there's been a lot go on since the last time. So we'll start out with Alex Orrell from the Kansas Bankers Association with his report, and we'll move on from there. Welcome, Alex.
Good morning, Mr. Chairman. Thank you for the opportunity to be here. Last time I believe I was in front of this committee, I was right after a Chiefs game as well. So this is a good habit, Mr. Chairman. I think we can go ahead and schedule the next hearing for next year after either the AFC Divisional or AFC.
Oh, we'll do one next week. Then.
Yeah, I like that strategy too, Mr. Chairman. I promise this will be just as exciting as that game too, because the state of the banking industry update is very exciting. But Mr. Chairman, members of the committee, thank you for the opportunity to be here. For the record, I am Alex Orrell, appearing on behalf of the Kansas Bankers Association. It is also my pleasure to introduce Kelly Vanzell, who is Assistant Vice President in Government Relations. Many of you know Kelly. Kelly is taking a much larger role in the State House and helping us on our lobby team, so you'll start seeing her a lot more and testifying a lot more. Kathy Taylor, who's our Executive Vice President General Counsel, was not able to be here this morning. She had meetings back at the office, but Kelly is going to start taking on a lot more of those responsibilities, so do look for her as a resource. She is extremely smart and is definitely the brains behind the operation, like I told the Senate committee last week on this testimony. I do mean that. We look forward to being a resource for you this year on all banking-related issues, as well as insurance-related issues. I know the Senate committee is merged on both of those issues, but insurance is another issue I'll mention here later. The KBA, my testimony, I'm going to do a KBA 101 dive. Then I'll do kind of a global banking industry update, and then I'll kind of dive down in the issues that we're seeing within the industry. But for the KBA, we're not just an advocacy organization. We're definitely we're a bigger organization than that. We provide our bankers services from advocacy to educational training to insurance services and to legal and regulatory compliance support. Our mission statement is direct and straightforward. Together, we support our member banks and bankers with leadership, advocacy, and education to benefit the communities and customers they serve. Our membership includes 99% of the headquartered banks in Kansas and also includes 20 out-of-state commercial banks and the 7 savings and loans operating in Kansas that employ more than 22,000 Kansans that provide financial services in every single county in our state. Although we represent the smallest bank in Kansas operating to the largest banks in Kansas operating, our membership is governed by a one member, one vote. Very democratic process that we take very, very seriously. In our services, we offer an array of services. I'll start with KBA Insurance. KBA Insurance is a subsidiary of KBA. It was started in 1900. We were started in 1887. It offers bonding, property, casualty products, cybersecurity, bank director liability insurance, and life and health insurance products. That might be something you might not necessarily think about with KBA Insurance, but we do have a very robust health plan. We provide health insurance to over 12,000 Kansas bankers and their families at over 175 institutions. And because of the largeness of that plan, we are the second largest group health plan in the state with Blue Cross Blue Shield behind the state itself. That was a need that our banks wanted us to embark on, and we've been operating that health plan since 1940. We are a federally regulated plan. We are under the jurisdiction of the U.S. Department of Labor and the Employee Retirement Income Security Act in 1974. The reason why I bring that up is because we did introduce a bill in the Senate side, Senate Bill 335, that addresses that health plan. We're working with the Kansas Cooperative Council on a piece of legislation that would reduce the tax burden on our federally regulated health plan because we are subject to a state level 1% premium tax, although we are federally regulated. Other ERISA plans in the state that are exactly like ours are not subject to that tax. Only the Association Health Plan Group plans are. So look for that bill. It did have a hearing in Senate Financial Institutions last week. But so I just mentioned that while talking about KBA Insurance. We also have an education and conferences department that provide over 300 training opportunities annually to over 4,000 bankers, from high-level economic and investment conferences to in-depth training for lenders and to training to frontline bank personnel. We also invest in financial literacy programs from customers and also focus on financial literacy for high school students and financial protection for the elderly. We have a Kansas Bankers Educational Foundation that provides scholarships to aspiring bankers or those that want to work in the financial sector. We work very closely with 2 of our universities, the Fort Hays State and Benedictine College. Fort Hays State has the Robbins Banking Institute that has a minor in banking. And Benedictine College just embarked on a new program as well called the Thompson Center for Integrity in Finance and Economics. Those are the only 2 schools in our state that actually have a minor in banking. We're working very closely with both of those schools. We actually teach some of the curriculum at Fort Hays State, some of our folks in our compliance department, which I'm going to move to next. KBA's legal and compliance department, we field more than 4,000 calls annually from Kansas bankers working to comply with the various state and federal regs. 11 years ago, we embarked on a new venture that our members wanted. And we formed Kansas Bankers Consulting Service to provide KBA member banks with compliance, audit, and legal assistance. That's actually where Kelly spends half of her time when she's not down here at the State House. Kelly actually audits banks and provides compliance and legal support to our member banks. There's 125 banks in our membership that are utilizing those services currently. And because of that service, we can actually contractually enter into a legal agreement with them to provide legal service for our member banks. We can actually act as their compliance officer now, and we are doing that for some of our member banks, and that's something we just started over the last year. Despite rising regulatory costs, the banking industry remains the backbone of local economies across Kansas. We all saw that over the last 2 years as the COVID-19 pandemic upended our lives. We are proud to say that our banks stuck with our folks and stuck with our communities and remained open throughout the pandemic. And I'll have an attachment talking about the Paycheck Protection Program and what that meant for the communities across Kansas. But proud to represent our member banks here today. The rest of my testimony, like I said, I'll start with kind of a global level, and then I'll kind of dive down the issues. But my first attachment, starting on page 3, is a general economic outlook from the Kansas City Federal Reserve. I would highly encourage this committee, if you ever need economic data or any resources, is to get on the Kansas City Federal Reserve's website to look at what they have. They have a vast amount of resources for you. They also have a great staff that is very responsive. Kansas City Fed President Esther George and her Chief of Staff Diane Rayleigh have great partners with the Kansas Bankers Association, work with them very closely on a lot of issues. If you ever need anything, reach out to them. They will respond. This is their December 21 national outlook. I am not an economist, nor did I stay at a Holiday Inn Express last night, so I'm not going to try and pretend to be one today, but I will point you to a couple of slides in here. On page 8 of my testimony, you'll see a graph on there talking about inflation. A lot of people are talking about this, and in this graph, you'll see that inflation is at a 30-year high. The next page, talking about supply and will workers return to the labor force. The financial sector, just like everybody else, is dealing with workforce shortages. We are having problems filling positions too. I'll use my brother as an example. My brother is a banker in Kansas City, works for Security Bank of Kansas City. He manages 9 branches for them on the Kansas City side. He's a regional VP for them. Just last week, he was working the teller line in the drive-thru. He's a regional VP for them. So they are struggling drastically too with finding people, and that goes for all of our institutions. The last one that I'll point to is on page 15, and it's regarding monetary policy, regarding interest rates. The FOMC, or the Federal Open Markets Committee, you may have heard, those are the group that sets monetary policy. That is made up of the 7 members of the Federal Reserve Board of Governors in Washington, D.C., the New York Federal Reserve Bank president, and 4 remaining 11 Federal Reserve Bank presidents. They meet throughout the year, and they're the ones that set monetary policy and set the interest rates. They are actually meeting this week. They meet on January 25th and 26th. It is anticipated that we could see an uptick in interest rate this week, in the federal funds rate. There is definitely some chatter that we could see this happen multiple times this year. Even I've seen some quotes of 3 times this year. So you see in this graph, even up by 2024, this could get up to 200 basis points by the end of the year, or by the end of 2024. So I just bring that up as an example to show you. The next attachment, like I said, still staying global, Paycheck Protection Program. That saved a lot of small businesses, as we all know, and was a great program that the federal government rolled out. Our banks worked their tails off through that program, around the clock, weekends, nights, making sure that those folks were able to get the funds. Because at first, we didn't know there was going to be round 1 or round 2, didn't know if there was going to be money. So people were working like crazy to get that. I know the commissioner talked about, bank commissioner testified last week, talking about there was some fee income that banks did receive from that. And I'm going to tell you, it was absolutely warranted, 100%. They worked their tails off. And what a lot of those banks did with that money, they took that money and put it in their provisional or their loan loss reserve fund, just in case, if things start to, go crazy down the road, and they might need that money. So that was where a lot of that fee income went. On this collective report from the Paycheck Protection Program, I'll direct your attention to page 21 of my report that talks about who did the most of the lending on these paycheck protection loans. And then on page 5, you'll see where Kansas ranked, or Kansas compared to all the other states, the amount of loans that went out. And then on page 8, you'll see the industry by sector about who took the most amount of PPP funds. Number 1, no surprise, healthcare and social assistance was the #1 group. #2, professional, scientific, and technical services. #3, construction. #4, manufacturing, and goes on down the list. But you'll see the top list of those that were approved for PPP loans. In Kansas alone, the average PPP loan size was $93,000, did over 53,000 loans. Kansas fared extremely well during the Paycheck Protection Program, and there's a reason for that. In states that had a very strong community bank presence, Kansas is a very strong community bank state. Those states did extremely better than those that did not have a strong community bank presence. There was a Bloomberg article, this was early on in the process, but I still believe it is very relevant to this conversation. Kansas ranked 3rd in the nation in terms of covering eligible payroll in our state. The reason being for that is because we have community banks across our whole entire state, and we're not just a state that has 20 banks. I'm proud of Kansas for doing that work and being able to cover that amount of eligible payroll. It made a difference in our state, and there's people that still have jobs now because of that. Moving on to my next attachment, you'll see an FDIC state profile. I know the bank commissioner gave his testimony last week. He talked about bank charters. There's 2 things on this sheet that I'll mention. I'm actually going to refer to 2 pieces of the commissioner's testimony as well. But one thing I will look to and I'll direct your attention to is number of institutions. Back in 2019, we had 227 institutions operating here. Now in Q3 of 2021, there's 217. And if you look at the commissioner's testimony on page 9, we've seen a decrease of 24 state charter banks from 2017, a decrease from 8 Federal Reserve member banks. This is a trend we're continuing to see. I think when Doug Wareham, my president and CEO, was in my position when he was hired about 16 years ago, we had over 360 banks operating in Kansas. Now we're down to a little over 200. I'll tell you that is concerning when you're talking in terms of access to credit. A lot of these are some of the rural banks in the rural communities. When you lose that financial institution in that community, you lose that economic driver. You lose those good paying jobs in there too. That is something that is concerning us significantly. We'd love to get back to where we're cutting ribbons on de novo institutions, brand new banks. We haven't done that since 2007. It's the last time we had a new opening. Now, some of that is federal regulatory capital requirements to start one. I have some comments on that, which that not all everything fits the same regarding urban markets and rural markets. I would love to see a time where we can come back to have some de novo institutions in my lifetime. The other piece I'll look to is regarding capital ratios. I know the commissioner mentioned last week too, we do have some institutions that are doing well on their capital ratios. I'll point to the sheet on page 8 regarding his CAMEL ratios. This is where you rank banks on how they're doing and how safety and sound they are. Proud to report we don't have any 4 or 5 ranked banks. That is a good thing. It's an extremely good thing. But the capital ratios is something we are looking at very closely. Kathy and I actually had the opportunity to travel to state and visit a lot of banks last year, talking to them about this. One of the major things they brought up was capital ratios. We are subject to what's called, a lot of our member banks are subject to what's called a community bank leverage ratio, which means they have to have a certain amount of capital on hand. And what happened with the Paycheck Protection Program, this is a good thing, but it's kind of a weird dynamic they're currently in, is a lot of the county money came down, a lot of the city money came down, a lot of the hospital money came down, and a lot of that money is still sitting on the balance sheets. It hasn't been spent. So it's putting a little, you have a huge influx of cash into the bank, but then if you don't have the capital, or if you don't have the loan demand to back that up at the same time, or you don't have the capital, your capital ratios can get strained. And some of our banks were put in a little bit of that bind. And there was regulatory relief given by the regulators, but that went away at the end of the calendar year last year. And in response to that, in my next attachment, you'll see on page 31, Congressman Tracy Mann introduced what's called the Community Bank Relief Act on December 7th to fix the rate at a lower range. What we're really asking here for is, and I think it's on the page 33, is just asking for a little more time, really like a 4-quarter grace period here. This money will be spent. It's just currently sitting on those sheets. All we're asking the regulators to do is allow that money to work through the system a little bit longer. It's just currently sitting there. The folks are still trying to plan on what they do with the money. Once that money goes off the balance sheets, that makes it a little easier, because right now, you're asking us to either, turn away business or inject a significant amount of capital into the institution. And it's kind of putting us in a really difficult position there. So appreciate Congressman's efforts on that piece of legislation. Next attachment on page 40 that I'll point to is regarding cannabis banking. This is an issue I get talked to quite a bit. I'll be direct with this committee. This is a federal issue in terms of banking cannabis-related business. 36 states have legalized cannabis for medical or adult use, but for banks, that means all proceeds generated by cannabis-related business operating in compliance with state law are unlawful, and that any attempt to conduct financial transaction with that money, including accepting a deposit, is considered money laundering. But leaving the cannabis industry unbanked is not a viable option anymore. It is a massive sector, and in states where it has been legalized. So we are pushing for a piece of legislation at the federal level called the Secure and Fair Enforcement Banking Act of 2021, HR 1996. It did pass the U.S. House last March, 321 to 101, so extreme bipartisan support, and it's currently sitting in the Senate. What all the bill would do is allow banks to serve the cannabis-related businesses states where the activity is legal. It's a safety issue. You have some states where you're having runners, you're having safety, you're having Brinks trucks loaded with cash, and it's not a safe thing for anybody. So if it is actively illegal in those states, this bill would allow those financial institutions to bank that related business. The next piece of the issue that I'll bring up, and it's actually part of it's in response to this legislature's work last year, is on page 41 of my report, enhancing credit opportunities for rural America. In Senate Bill 15, the tax piece of that legislation is exactly what this piece is, which will help lower the cost of financing farm and ranch real estate. This bill is being pushed hard at the federal level. It is also being considered in 6 to 10 other states at the state level. It has 26 co-sponsors in the U.S. House and has 9 U.S. senators co-sponsoring it as well. Kansas was the first state to pass a piece of legislation of that kind. So I want to thank this committee for your support. It was a major piece of legislation, and I just can't thank you enough because we're starting to see the ripple effects of that implementation of that law. So thank you for your support. A couple other things that are not in my packet, but things that have come up in the last week or so that we've been talking about is regarding ATMs. Actually working on some legislation with Stephanie and the Heartland Credit Union Association, and working in the Senate Judiciary right now on some legislation regarding ATM destruction and theft, also known as smash and grab. We've been seeing a large uptick in destruction and theft of ATM machines. Texas recently passed legislation last year to make it a third-degree felony. You would think if you rip open a ATM and take the money from it, that's bank robbery, right? You're stealing money from a bank. But under federal law, that is not, because there's no person involved. It's not directly tied to the building. But what we've seen is Texas put stronger laws on the books, and Oklahoma is looking to do the same thing, and Missouri is looking to do the same thing. And what we've seen now is kind of the traffic is moving a little farther north. We've had a bank in southeast Kansas get hit multiple times. We've had a bank here in Topeka that got hit a couple weeks ago, and we had a bank in Kansas City got hit 3 times in the last year. When you do that to an ATM, those are $70,000 to $100,000 machines. If they're the ITMs, the real advanced ones, they're significantly more expensive than that. They are insured machines, but those deductibles typically are about $25,000. And then if you get hit multiple times, like the bank in Southeast Kansas did, their premiums last year went up $29,000 just on that insurance policy alone because they were hit so many times. Then you really have a reduction in service, specifically in the rural communities. If that ATM goes down, there's supply chain issues that are associated with that too, of getting an ATM replaced and installed in that community. It is organized crime, so we are looking at making our penalties a little tougher in Kansas. If the person is caught, it is a non-person misdemeanor. And if it is prosecuted, and a lot of times it's not, because they're just going to get probation anyway. So we are looking at legislation to strengthen that law here in Kansas because it is private property rights to protect that, and to be tough on crime on things like this, because it is bank robbery. I mean, you're stealing money from a bank or a financial institution. Stephanie's dealing with this too. So Another piece of legislation we're also looking at is regarding modernizing our uniform trust code. Once again, very exciting stuff. But what we've come to find out has been working with one of our members, trust company in Kansas City. We do represent trust companies too. We have KBA Trust Division. It's been around for over 100 years. What we found out is our neighbors to the east of Missouri have some updated trust code laws that makes our trust companies not as competitive, and it's taking some of the business out of Kansas and doing them in Missouri because of some of their laws they've updated in recent years. So we're actually working with Eileen on the Senate side, Ma, on drafting some legislation on that. So hope to have a bill introduced there soon. So, Mr. Chairman, that is all I have for my testimony today. I appreciate this committee's work and your due diligence. Appreciate your service, and I wish you the best of luck this session. And if Kelly and I can ever do anything for you, please don't hesitate to reach out, and I'll stand for questions at the appropriate time.
Nick, Representative Hoheisel, you have a question?
Yes, sir. Thank you, Mr. Chair. Actually, I have 3 different questions, if I may. The first one is regard to the SAFE Act. Let's say this passes on the federal level. Is there any legislation you guys will need passed on the state level to codify that?
I don't believe so. I just looked to my attorney back there. No, just if this legislature did make the move to adopt, cannabis-related legislation, which we do not have a position on that type of legislation, but if you did do that, which I know there's been talks of doing that, it would make it so we would be able to bank that related business.
Second question is in regard to the federal proposal. It used to be $600, now it's $10,000 to report the inflow and outflow of private bank accounts to the IRS. What is the status of that, and what would that do? What kind of burden would that put on, especially your small local banks?
Yes, absolutely. Thank you for bringing that issue up. I should have addressed that. That proposal is extremely concerning, especially if it's 600, especially if it's 10,000. Doesn't matter what the amount is. There's been some messaging that has kind of been confused on that issue. They're like, well, banks already have to report $10,000 transactions. That is semi-correct. The $10,000 transaction is regarding a cash transaction, and that transaction is only reported to FinCEN, not to the IRS. So I want to make that very clear because they made it sound like, well, you guys are already doing this. The economic impact on the financial institution it would be a significant cost factor as well for our institution. I know we had one bank, and it was a bank in the Hutch area, that gave us a preliminary estimate. I think they're a $300 to $400 million asset bank, that the one-time cost of just implementing the IT and things like that on their core provider was going to be $75,000 to $100,000 just to implement the service. And then you talk about the time that they're going to have to put in for manpower. They're going to have to add in some FTEs as well to start reporting these types. And who's that cost ultimately going to be put on? It's going to be put on Kansans. It's going to be on, that cost is going to have to be covered somewhere. So we are still absolutely opposed to that proposal on the $10,000 limit, but that issue, in my understanding, is not dead. I think the $600 limit is dead, but the 10,000 one is definitely still alive. And, we've even heard rumors that it could be put in the BBB plan, so.
And to clarify, it's not a $10,000 transaction. It's a $10,000 of aggregated transactions throughout the year, correct, in that personal account?
I believe it's per transaction. Per transaction.
Per transaction? Okay. My third question is in regards to crypto. What do you guys think? What do the bankers think of crypto? Is there anything on the horizon you guys are looking at?
So I'm glad, I thought that Mr. Vice Chairman would bring a question on crypto because he talked quite a bit about this. So I actually printed something off this morning on this.
Good man, Alex. Good man.
From Federal Reserve Chairman Jay Powell, who's a lot smarter than I on this issue. So I'll read from what he says on this. I do think crypto assets are risky. They're not backed by anything. And I think there's a big consumer issue for consumers who may or may not understand what they're getting. I personally do own some cryptocurrency. I kind of want to just own it to see what's going on in the market. But everything I have invested in there, I am perfectly okay with losing at this point. It is an extremely volatile market. Ethereum is down 45% in the last month. Bitcoin is down 33%. Doge is down 29%. You have the energy efficiency market, or the energy efficiency problems associated with it from mining. I mean, China banned the miners last year, and most of the miners tried to find safe harbor in another country, and they moved to Kazakhstan. And we've seen a huge uprising in the Kazakhstan government as of last week, and actually overthrew their government last week due to this. And I think Kazakhstan actually houses about 15% of the miners. And the telecom industry actually shut them down last week from mining, and that's why you're also seeing a huge decrease in the prices there. It is very volatile and very risky. President Powell has called on Congress to, to really look at this in a serious manner, because, people are making money off it. We've seen that, but there's a lot of people losing a lot of money on it too. So for us, they have this is Powell, they have the potential to scale, particularly if they were to be associated with one of the very large tech networks that exist, but there needs to be a lot of oversight here. And, does blockchain have I know Ethereum has a blockchain aspect to it, where there's this tracking component to it. I don't believe Bitcoin has that. So if there's a little bit more transparency and tracking, I think there may be something that could be done with it, but I'm not an expert by any means on it, but I do think it's very interesting.
Thank you, Alex. Thank you, Mr. Chair.
Representative Wassinger?
Thank you, Mr. Chair. I had a few questions. One is, what do you think is the main reason why financial institutions have not dispersed those funds? So when you ask for that overtime on a football note, what are you telling them? Why is it not being dispersed?
Representative, it's actually not up to us. That is the customer of the financial institution's choice. This is the county that is a customer of the bank, or the hospital that is the customer of the bank, or the school district that is the customer. They are the ones that have the money in their accounts, and they are not spending it. Right.
Well, how long were they given? Weren't they in the same kind of time frame as everyone else? So
there was a timeline to have those paycheck protection loans forgiven, and they were meant to be covering that eligible payroll, and they did meet those guidelines to it. But there is still a significant amount of money sitting on these balance sheets that they still need to spend. And so that's not a decision made by us. That is a decision made by them. And so we think, and what I've heard from bankers, specifically my state affairs policy chairman, 2 to 3 quarters. If we're allowed still that little bit of leniency, that money it will be spent. It's just right now it's sitting there right now. And with loan demand where it's at right now too, we can't use that money to loan out either to make money on that either. So it's a really interesting dynamic we're currently sitting in that we really haven't seen before.
And you, if I may, and you think that these customers will say, great, well, we'll hurry up and get it done in the next 2 quarters, since they have been dragging their feet this long. So what is I know you don't have a crystal ball, but we could give them 2 more quarters. What do we do when they don't have it done then?
We would keep going back and asking for relief and just keep having the conversations, Representative. Like I said, I wish I had a good answer, but I don't.
Okay, and one more question, if I may.
Okay.
Where do the cannabis people put their money right now? And since we don't have legalized marijuana, is that allowing the camel's nose under the tent before we even do anything about properly?
I think we would be naive to say that some of this money is not ending up in some financial institutions, whether it be a bank or another financial institution. But you do run the risk, if you do take that money, of jeopardizing your FDIC insurance. Some banks will be willing to take that risk, or some other financial institution may be willing to take that risk. Some aren't. Some are just storing that cash. There is a horror story that I did hear that somebody bought up a storage facility and is hiring security to secure that storage facility, and is just storing cash in that storage facility. Or they're using that cash I know Colorado had a significant problem with this, of buying up real estate and depleting the real estate market values, because that's the only thing they could do with the cash, was to buy real estate with it. So there needs to be something, and that's what we keep pushing at the federal level, that this isn't a cannabis bill. 36 states have legalized it. We need to figure out a safe way to get this money into the system and to have it under some serious regulatory oversight like we are governed from a safety and soundness perspective.
Okay. May I don't know, I'm taking time. Just one last one.
One last one.
Last one. You know, we read so much about the fraud in PPP loans. Is the relationship in Kansas, the percentage of fraud in the PPP loans the same as the rest of the United States, or did we fare well better?
You know, we did not hear of much fraud here in Kansas on the Paycheck Protection Program. I heard of a couple instances. You know, there was one in the one that was public in the Wichita area that I think some of the members of this legislature is aware of. But I know there is an avenue for complaints that can be filed with the Attorney General's office. So when we did receive those issues, we were able to direct them to the Attorney General's office because that is the right avenue, them and the Small Business Administration for that.
Thank you very much, Mr. Chair. I'm actually done.
Representative Weigel.
Thank you, Mr. Chairman. Thank you for your presentation, Alex. I have two questions. First, concerning the cannabis issue. This new bill that's being proposed as a solution to this problem, are they going to have any special considerations or I don't know what the term would be, prohibitions on what they can do if the bill becomes law to somehow keep that money that's coming from a entity that's going to the banking system, keep that separate from other funds that are coming in, or they're just going to say, yeah, it's all the same and we're not going to worry about it?
You know, Representative, I'm not sure on that, to be honest with you. I'm just looking at this one pager here. I know the banking regulators are to provide explicit, clear, and uniform expectations regarding the treatment of all cannabis-related accounts. Now, do I know the specifics of that? No. But what I can do is I can get back to you and I can get to Rich and I can get a more detailed answer to this committee. I can check with Doug and Kathy, who are really our main points of contacts on federal regulatory, and get you a more detailed answer.
I'd appreciate that if you could find out for me and for the committee. Thank you. And the second one has to deal with the ATM machines. You said that, first of all, when you say an ATM machine, I think where I go, that they're pretty much well protected. I mean, they're bolted into the, into concrete, and they got pillars around them. Are you talking about somebody's actually physically pulling up and taking the machine?
They are pulling up with either a stolen truck or backhoe and with a chain and literally ripping that thing off, taking a blowtorch to it and opening it up.
That's just pretty brazen, isn't it? I mean, they're either affixed to a wall of the bank or they're freestanding in the drive-through. That's been my experience.
You would be surprised at how quick and organized they are. I think we've seen instances where it's 2 to 3 minutes that they can be in and out.
Okay.
It's pretty impressive.
And you say that it's not a felony when they do that?
Nope. Under state law, it is misdemeanor, non-person.
Okay. All right. Thank you, Mr. Chairman.
Any final question? Representative Kessler?
Thank you, Mr. Chair. You said when you were talking about on this federal law with the cannabis that it was states that have passed marijuana laws or cannabis laws. How about the states that haven't passed cannabis laws? Would it trickle down to there? Because we haven't passed cannabis in Kansas, but there's a lot of shops that sell CBD. But in a lot of situations, CBD is also unbankable when it comes to the Kansas banks. Is there a way that federal would maybe filter and to catch some of that too?
Absolutely. That would definitely help filter some of that, because right now some of our banks that are financing a strip mall that has a CBD store in it that has some of those products that has a little bit of THC, 'cause I think the state level is what, 0.03%. If it has that amount in it, that is against federal law. And so technically, we are serving a cannabis-related industry that is illegal under federal law. So, I mean, there's still, our lenders have a decision to make here. Do they continue to finance that business that serves that or not? And it's a really tough position to be in because you all have legalized it here at the state level to that limit, but under federal law, it's illegal. So we're being put in a very, very, horrible, tough position, untenable position of what to do here. And that's why we're asking for relief at the federal level here, because that's really the only place where we can get it.
Thank you, Mr. Chair.
Alex, thanks very much for being here this morning. Appreciate it.
Thank you, Mr. Chairman.
Next up, the Community Bankers Association is here, and Sean Mitchell. And welcome, Sean.
Good morning, Mr. Chairman, members of the committee. It's my pleasure to be here. I will not go over near as much as Alex did. I kind of knew what he was going to present, so trust me, I will not be up for that. I'm going to tell you more just about the association. As the chairman said, I am Sean Mitchell. I am currently the president and chief executive officer of the Community Bankers Association of Kansas, CBA. A little bit about me. I started my banking career back in 1995. I worked in 3 separate Kansas community banks. My last one, I served as president and chief executive officer of the Farmers and Merchants State Bank in Wakefield, Kansas, just west of Manhattan. Left that and I came here in beginning of 2009 to run the association. So this is my 14th session. It's amazing that I've been here 14 years doing this. Still shocks me. CBA, we're a 501c6 trade association formed in 1978 of locally owned and operated Kansas community banks, bound together by the shared philosophy that a locally owned community bank can best serve its unique community. Our CBA membership is limited to community banks only. In contrast, we don't accept any of the large national banks that are based in other cities, other states that come into the Kansas, only locally owned Kansas community banks. That's the biggest distinction between us and the KBA. We are more of a subset representing only the Kansas side of this, and particularly more of the rural community banks are members of us. That's kind of the group that formed us. So we engage in policy, but primarily anything that's only going to affect our banks. We're more of a watchdog just to make sure that big banks don't try to get an advantage over our community banks. We operate with a very small staff. We're a staff of 3, so we are very nimble. My job encompasses so much, it's a little hard to believe sometimes. So you won't see me down here all of the time. We employ Little Government Relations. Stuart Little is back here with me, and Mallory. Everyone knows Stuart. He just does a fine job of representing the association, making sure I'm informed that if I need to come down here and testify, make sure our voice is heard that I'm down here, but they take care of that. So with that, it's a pleasure for me to introduce myself and the association. We're always here as a resource. I've said this for 14 years. I speak like a banker. I'm not really a lobbyist. I just happen to run an association. So I speak banker. I understand banking. That's my forte while I'm here. So with that, I'm happy to stand for any questions if you have them.
Thank you, Sean. Any question? Representative Hoheisel?
Thank you, Mr. Chair. And thank you, Sean, for being here today. Just the same question I asked Alex about the threshold. Do you see that as burdensome to your?
I think it's horrible.
Okay.
It is going to drag in so many people that have no idea that you're going to have an issue on the consumer side, business side, and then the logistics of any financial institution, gathering that and tracking that. All of a sudden, the institutions are the bad people. And I don't even know how, if you send all that information to the IRS, there's no way they can look at that. It just seems like such an invasion of privacy that I think it's a horrible idea, and it is not dead. You've been around long enough. Nothing in DC is truly dead. It can be attached to something. So we're watching that very closely.
Okay. Thank you, Sean. Thank you, Mr. Chair.
Thank you very much, Sean. Appreciate you being here.
Thank you, Mr. Chairman.
Now we will move into the credit union review and appreciate Vicki Hurt and Stephanie Mulholland for being here today. And we're going to start out with Vicki, the administrator of the Kansas Department of Credit Unions, and welcome to the committee.
Thank you. Appreciate having the opportunity to be here today and speak with you a little bit about credit unions. I'm Vicki Hurt, and I'm the administrator for the Kansas Department of Credit Unions. And my appointment has actually expired at the end of December, and so I will just be serving until the new appointment's made, which will, my height is always an issue, which should be in the next month or so. The governor should have that out. I know she's looking at a couple of candidates now, so I will continue to serve until that's done. I've been at this department about 15 months or so, but I was fulfilling another term, Gerald Wright's term, and I was with credit unions for 20-some years before that. So I provided you with our department mission and our agency philosophy, and I will tell you basically the part of that is what we do is affirm that the funds deposited in Kansas chartered credit unions are protected to the best of our ability. So that's what our department does, is we go out and examine credit unions to make sure that all the funds are protected. We're a not-for-profit financial-owned cooperative, which is a similar structure to the farm co-ops and the electric co-ops. Our committees and our boards are all elected by the membership and serve as unpaid volunteers. And all of our funds are insured up to $250,000, very similar to the Fdic insurance. I gave you a little bit of history there on our first credit union, which it still exists today. We are accredited by NASCUS, which is the National Association of State Chartered Credit Unions. And they come in every 5 years and do a pretty extensive exam of our department to make sure that we are doing what we need to be doing and that we're protecting Kansas citizens the way we should be. And it's very thorough, and it's nice to have that outside confirmation that we're doing what we're supposed to be doing. Our budget is 100% fee funded by credit unions. We do have a formula that we go by, and we can adjust that some. And our 2022 revenue, that says 21, but it's 2022 revenue is 1.1 million, and our budget was 1.275, but we do have a little bit of carryover, so we watch that very closely. Largest portion of our budget's always in salaries and travel, and then 100% is $100,000 is contributed to the state general fund. And as the end of December, we'd gone through 50% of the budget year, and our department had spent 42% of our budget. And that's primarily because we've been very careful on the travel and doing a lot of hybrid exams, a lot of remote exams. And so our travel's been down. Plus, we've been down staffing. We have a very small department. We only have 12 employees in our department. We have a couple of positions open. One's been hired, well, actually two's been hired now. So they will start next week, and we'll get them trained. By statute, we are required to examine credit unions every 18 months, and we average about every 15 months with our credit unions. And in 2021, we completed 49 exams and 9 follow-up contacts. I provide you a little information on how we do our exam process with the safety and soundness and the different risk areas that we look at. I will tell you, we do the same composite ratings that banks do. Basically, they cover the same thing: capital asset quality management, earnings, asset liability management. And then we give them a composite rating of 1 through 5, 1 with being the best, and 90% of the assets in our credit unions have a composite rating of 1 or 2. So that's, and our assets are $6.1 billion as of 9/30. So that's 96% of the assets have the CAMEL ratings 1 or 2, which is very strong. We have 74 credit unions in Kansas, 50, as of 9/30, 55 were state chartered, 19 federal charter, which gives 74% of the credit unions are state chartered credit unions. We did have 2 mergers at year end, and as the banking numbers continue to see their number of banks decrease, we continue to see our number of credit unions decrease also. We had two less at year end. We probably had 3 mergers total last year. We have another one that's working, so we continue to see that decrease also. Our largest credit union is out of Wichita, it's 1.6 billion. Our smallest credit union is in Norwesco, which is 131,000 out in St. Francis. Our total assets, 6.1 billion, saw about 10% increase in assets from 9/20 through 9/21. And the previous year, we saw about 16% increase in our assets, which is primarily for us. We don't have the other corporate money coming in, but banks do. Ours was primarily stimulus money coming in that people were holding on to. We have 11 credit unions that are over 100 million, 7 that are 50 to 100, 19 that are 10 to 50, and 18 that are less than 10 million. So we have 37 credit unions of the 55 that are under 50 million. I provided you with our net worth status compared to our peers, and they are either above or very near what the national peers are. And our credit unions have struggled too with the additional funds coming in. Luckily, most of them had very strong capital to start with. So they're doing okay for now. Our loans to assets are about 70%. We'd like that to be a little bit higher. That's pretty close to our national average. We'd like to see that about 80, but with all the additional money coming in the last 2 years, it's hard to get that money out. Although they've done pretty good. Delinquencies, our delinquencies are 47 basis points, which is very low. That's a lot lower than the national average and down considerably from what it was a few years ago. And I believe that's because where some of the stimulus money is paid off, some of those delinquencies. So I think overall, our credit unions are doing very well financially and are at or above a national peer in almost all of our areas. So that's all I have for my presentation, but I will be glad to take any questions you have.
Well, thank you very much. And do we have any questions?
And I have given you my contact information, so if you have any questions or need to contact me in the future, feel free to do so.
Okay. Thank you very much for being here this morning. And our next presenter will be Stephanie Mulholland. She's with Heartland Credit Union Association, and she's regular here on the reviews. So welcome, Stephanie.
Thank you, Mr. Chairman. Thank you for the invitation to come today. I think I'm the last thing between your chance to grab a cup of coffee or check emails before session, so I'll try to be brief. I am Stephanie Mulholland here on behalf of Heartland Credit Union Association. We represent the 74 credit unions in the state, which Vicki mentioned includes 55 state chartered, which are regulated by her department. And then we have 19 federally chartered credit unions that are headquartered in Kansas. Those are regulated by the NCUA. There are roughly 676,000 Kansans who belong to one of those credit unions. As Vicki mentioned, we are not-for-profit co-ops. So our cooperative structure means that we operate differently than for-profit institutions might. The biggest distinction being our not-for-profit mission. When the profits are paid out at a credit union, those profits are returned to each member of the credit union. So last year, Kansas credit unions returned a little over $100,000 to Kansans. Those profits can be paid out in a few different ways, lowering loan rates, increasing return on savings, lowering fees for services, or in some cases, those are direct dividend checks to the members. A couple of other differences I'll point out, credit unions are governed by a volunteer board. Those are members of the credit union that their fellow members elect to serve on the board on their behalf. And credit unions are governed democratically, so each member of the credit union has an equal vote. Whether you have $25 or $250,000 in the credit union, everybody has an equal vote. So Kansans started forming credit unions about 100 years ago. That was on the verge of the Great Depression. If folks could not find funding from traditional sources, they started to pool their money and form credit unions, which is why to this day you'll find that most credit unions are centered around a particular workplace, or if they went to school together or they went to church together. So like in Wichita, Ameritrust Credit Union is the credit union that was formed by Stearman employees at the time, then Boeing, now Spirit employees. Great Plains Credit Union in western Kansas was formed by ag producers at their local co-op. Topeka police officers have a credit union a few blocks from here that the officers started that's located inside the police station. All of our active military families and veterans have credit unions on each of the bases in Kansas. Main Street Credit Union in Johnson County was formed by Johnson County teachers. And then several of the Catholic churches in Kansas have credit unions for their parishioners. In my written testimony, I gave you a breakdown of some of the industries where most credit unions got their start. In terms of market share, we hold roughly 7% of the deposits in Kansas. That's a percentage that we've held pretty steady at for decades. Though we're a relatively small share of that market, we do think we know we play a big role in a number of families' lives. As I mentioned, 676,000 Kansans have counted on us in some way for financing or for savings opportunities. So we know that we fill that gap for people who might not be able to obtain financing elsewhere, as well as helping to drive competition and consumer choice. So in my written testimony, I gave you a few examples of some of the things that credit unions have done over the past year. I thought I'd touch on some of those. We made loans to over 89,000 Kansans who had a credit score of 640 or less. We made nearly $39,000 small dollar loans to help folks bridge the gap between paychecks. We paid over $30 million in taxes last year. That included property taxes, sales taxes, and unrelated business income tax. We provided nearly 65,000 Kansans with free financial and debt counseling services, as well as the financial literacy training that credit unions do in their schools. And we offered more than 51,000 skipped loan payments or loan deferments to help Kansans overcome a temporary hardship without having their credit score impacted. I wanted to close by just talking about some of the challenges or barriers that we see going forward. Charter loss has already been mentioned a couple times here today. That's certainly a concern that ranks near the top of our list. Kansas has lost over 248 credit union charters. We attribute that primarily to regulation and the cost of regulation. So a lot of times when we see federal regulation increase, smaller credit unions have to make that choice to vote to merge with another to help shoulder some of those costs together. We also have some outdated market restrictions on the books, but this committee and the legislature successfully amended field of membership last year, and want to express our appreciation for that and really thank you for the work you did on that. That certainly has removed barriers so that more Kansans can access a credit union if they'd like to. And then we've talked about the one-size-fits-all regulation, as well as the IRS proposal and things like that, that we have concerns about how that might affect our members. And like most employers in the state right now, we're seeing staffing shortages. So working through that and working on new ways to recruit people into the industry. So with that, I'm happy to take questions and appreciate the chance to be here.
Thank you, Stephanie. How about questions? Representative Hoheisel?
Thank you, Mr. Chair. Thank you, Stephanie, for being here today. I think you know what I'm going to ask. If you go into a little more detail about what burden that would be on your credit unions.
Sure. So we estimate already that Kansas credit unions spend about $30 million meeting on compliance and meeting federal regulatory requirements. So we do anticipate that would drive up that cost. We think there'd be a need for additional staff. And then, you know, we, through this fight, I know the banks as well, we all did quite a push at the federal level to try to stop this proposal from coming down. We had more than 8,100 Kansas Credit Union members engage in that effort with concerns over their privacy and their financial privacy. So it would definitely be a cost, as well as, I think, the cost that comes to consumers.
Representative Shu?
Thank you, Mr. Chair. As my friend, the Vice Chair, has asked this question a couple times, I figured I would respond with a question. So I think we all know here that I understand your opposition, certainly, but opposing something in the big scheme of things is fairly simple to do. What is more difficult is to find actual solutions to real problems. And then so wherever you stand on this particular proposal, I get it, but it is trying to address an actual problem, which is really opaque income sources. I think a really common example of this is landlords getting paid through Venmo, for example, right? Like that's not really found anywhere. And so I think the goal of this proposal is to find that. So do any of the conferees have a suggestion on a better way to address that particular problem?
I think that is a growing problem. I think what we find is when we get put in that role of being the one to be the investigatory entity, that's hard. Our members trust us. We don't want to lose that trust. And I think it's probably something that we all need to work together, the industry as well as federal government, in determining what that solution might be. Because I think the last thing we want to do is scare people out of being in traditional financial institutions altogether.
Any other questions? Well, just one quick one, Stephanie. With the number of members that you have out in that are in different industries and in education, have you seen from the stimulus money a good increase in personal savings over the time that those rolled in over the last couple of years?
We've seen, I think people are holding on to that money, saving it for a rainy day, using it to pay down loans. So we have seen quite a bit of that. And as Alex mentioned, I think people are tending to hold on to that money to save it for what if.
Any other things on your horizon for this year that haven't been mentioned yet?
The ATM legislation is the biggest thing that we're working on, continually looking for ways to address housing and how we might be able to help with rural and low-income housing. But ATM, I know Representative Weigel mentioned the concept of tearing the ATMs completely out. Another problem we're seeing is the easier method of, there's apparently been a movie or social media video on gluing the doors shut on the ATM, and then as people come and try to get cash, the thieves believe that the cash will then be there if they glue it shut and then later come back and hammer it open. So some of the ways that don't involve necessarily tearing the ATM out altogether, but still destroying the property and making it unusable for other people.
If only people spent their time figuring out how to do something good than how to do something bad, we'd be a lot better off. Any other questions? If not, thank you, Stephanie, very much. We will have, our next meeting will be Wednesday, and we'll have a bill that we're going to hear on Wednesday. So that will be our next one. We're going to have a short meeting afterwards for the vice chair and ranking member to do a little planning for the next few meetings coming up. But otherwise, if there's no further business, we are adjourned.